all of you to today's session of Visual JForex, in which we will talk about the moving average envelope. This is the part of the moving average series in which we are taking into how to use these various indicators, which are basically based on the moving averages, and figure out a combination or even the use of a single indicator in a profitable manner, and then implement that strategy in a automated format on the Visual JForex platform. So let's get started for the day. We will see the description for the MA envelope block here, and all you have to do is go through this Visual JForex helper, and here it is listed under the moving average indicator section. And in the session so far, starting with the DEMA, we have done these various indicators till MACD EXT, and now it is the turn of the MA envelope. This is fairly easy to understand and also fairly easy to use, and it's a excellent tool if it is utilized to kind of exclude the choppy trades in which there is not much of an momentum, and all it results is in losses because of the sideways price action in a range bound manner. So in such a scenario, the moving average envelope can be handy to kind of you can say determining and defining the break on crucial levels, and we can of course customize this indicator as per our need after going through the charting and seeing the historical examples. For a short description, you can see that this is a percentage based envelope which will be set on the both sides, on the higher side as well as on the lower side of the moving average, and we have to choose what percent we want to add or subtract to form this band. And in case of this MA envelope, the underlying moving average can be simple or exponential, and as I said, then we have to set the same percentage above and below the moving average. So let's get started. First we will add this on the chart so that it will be easier to understand how to use the moving average envelope in a profitable manner. So here is the MA envelope, and here the setting is set at default. It is being calculated on the 14 candle periods, and this is of the hourly time frame, and the deviation is of 0.1% here, 0.1, and this is the MA envelope, and it basically guides us to avoid choppy trades. So here I will give you an example. Suppose if we simply use the moving averages, then the moving average will be passing somewhere in between the price zone, and here in the moving average envelope we get this band defined, and now on chart you can't really see the moving average, which is going to be in between this band, and it is not part of the output. But suppose if you simply use the moving average, then what happens? It will close uh, above it and below it many a times whenever the momentum is not there, and the price action is basically choppy, as you can see from the example here. But if we define the moving average envelope on a certain time period, then you will see either a break on the higher side, and here also sometimes it can happen that you get wrong, that you get a break on the higher side, then price continues to rise for a while, and then again the reversal happens and the price action falls below it, and then suddenly you also get a break on the lower side, which also happens to be the wrong trigger, and then again the price action reverses. But instead of going for a single moving average line, here we get this bandwidth, and we can define where to consider the break, clear break above this certain level, and if we want the price action to be decisive, then all we have to do is increase the width of these bands, and for that the deviation needs to be increased. So increase the standard deviation, and you get the clarity you want for the price action. And as you can see now, if you simply say that the trade should happen only after a close above this moving average after due consolidation, then only when the price action is strongly in a momentum either on the upside or the downside, the trading will take place. So that way also you can define, but even in that scenario, of course, some of the decisions are going to go wrong, and in such instances you have to define the stop losses, and figure out what kind of combination actually is of optimum, what kind of combination is actually the optimum combination. And for that all you need to do is do some experimentation, see various configuration, and of course then do the back testing on the Visual JForex algorithm structure, and then you will have the results based on the historical data, how it might have performed earlier and what is the probability of it being in a profit moving forward. So here this is the block which I have put, and for this block all you have to do is go to this repository, and there it is listed under the moving average indicators. Now to cut short on time, as you are well familiar by now, I hope, with this board of the Visual JForex platform developed by the Dukascopy Bank SA. So straight away we will see various parameters which needs to be defined for the algorithmic strategy to be developed on this platform. First thing, you have to define the instrument, and mostly being the instrument of choice, the Euro USD is a preferred instrument for most of the traders, and I think that is one of the reason why the Dukascopy has decided to keep it as a default. But if you want to change this, all you have to do is go to this drag down menu and find the option on which you want to develop the algorithm, and pick it up. That's it. So in today's session we will not make any change. We will allow the Euro USD to remain the default instrument. And then comes the question of time period. The candles time period, you can define it starting from 10 seconds to 1 month, so it can be of anything on any time frame. For example, let us make it 15 minutes, then you will have the moving average envelope band of 15 minutes time frame. So here we will need to change it to 15 minutes. Okay, so here we got this moving average envelope defined for 14 candle periods of 15 minutes each. Let me see if we are getting the all the settings right. Yes, we are indeed getting all the settings right. Okay, and here the standard deviation is higher. It is 0.3, and on our Visual JForex platform we have kept the standard deviation 0.1 only. So whenever you want to make any change, you have to see how it performs on the on the chart, and then if you see that the combination is likely to profitable, then all you have to do is put the same configuration here, and you will have the system which will be doing the calculation exactly as you would have done in case you were to trade manually. So instead of bothering to sit in front of the screen all day long, all you have to do is define these parameters here on this block, and it will do your job effortlessly. Now the time period is 14. We can make changes to that as well. So suppose if you want to use a different time period for calculation of these MA envelopes, then you can do that. Let us for example change this to 30. So 30 MA envelope will look something like this. That's how this is going to look like. And now, as I said, that to avoid trading in choppy scenarios, all you have to do is get involved only when there is a clear-cut break above or below these bands. For bullish trades, mostly the traders prefer to go for a long positioning after there is a closure of last candle above this upper band of moving average envelope, and for bearish trade the sell trade happens as soon as there is a break below this lower band of moving average envelope. Now let us go back to again Visual JForex platform. Here we need to change the time period and make it 30. And now you might be getting a feeling that this standard deviation is a lot more than we actually need, and all you have to do is change it. I think 0.2 should do the job well enough. And of course, if it is working or not, for that you will have to do the back testing, and only then you will get the idea if it's working or not. So let us again go back and change the configuration. In this variable we write 0.2. Now the standard deviation has been changed to 0.2. Shift is the look back period. Suppose if we use the 0 value for shift, then the current value of this moving average envelope will be taken into account. If we use 5, then 5 candles will we will be going back 5 candlesticks back in time. Now this is of 15 minutes each, then that means we will be going back in time by 1 hour 15 minutes, and we will see what was the value of these MA envelope bands, the lower band as well as the higher band, and that value will be taken into consideration. So that's how we use these shift parameter, the shift input variable. Then we get these output values, the lower band and the higher band, and these are the outputs which we will use to set the conditions which we will define using the if and else statement, or the combination of other calculations and combinations. And as you might already be aware, as we have done many times, we have to define these settings. On which side the calculation is being done makes a lot of difference. Ask price, moving moving average envelope will be bit higher, as the ask price tends to be higher than the bid price, and there is a spread between bid and the ask price. And of course the applied price, on which price the moving average is going to be calculated, it will resultantly be reflected in the moving average envelope. So for example, I will try to show you here the kind of changes you see. And now the applied price is closing price. We just mark these lines and you will observe the change here. If we use high price, then the band shifts on the higher side. If we use low price, the band will shift on the lower side. And if we use the median price, high low divided by 2, then you will have in between. So how you use this price at which price you want to do your calculation for the moving average casts the impact on the final outcome. So that's why you have to be careful and see what is the best combination which can be used in such scenarios. So that's the freedom you get while defining the parameters in the Visual JForex platform, and then it will continue to work just the way you have defined. There won't be any deviation on any front after the algorithm has been defined by us, and it will continue to work just the way we would without any break or without any feeling of tiredness. That's why we continue to develop these algorithms and try to come up with a combination which will lighten our burden and also work efficiently. So that's it for the day, and I hope you have able to understand this indicator, and you will be able to use it in your own building of different algorithms involving the Visual JForex platform. We will be back tomorrow with a different technical indicator. Till then, have a fabulous time ahead. Goodbye.